He is one of the leading commercial real estate brokers and property consultants here in the Philippines. With over 20 years experience, he has facilitated some of the largest real estate transactions in the country, and under his leadership, he has uplifted an international real estate firm to become the largest in the Philippines. Let us all give a warm welcome to the CEO and founder of Leechiu Property Consultants Incorporated, Mr. David Leechiu.
Well, maybe I'll just stand up here. First of all, before we start, I'd just like to thank my friend Henry Ong for inviting me over to share my thoughts about what's going on in the property market with you. And also, I'd like to acknowledge a few people in the audience, mainly my siblings. My two sisters are here, and some of my colleagues from the office, and also my last but not least, my mom, who is the first mentor in my life in terms of financial planning. Thank you. So, thank you. I've been asked to talk about how to create wealth in real estate, and I thought in preparing this speech or this presentation that rather than giving you techniques on how to invest in real estate, I'd probably just give you a lot of information about what we see is going on in the Philippines and in the property market. Techniques are easy. Whether you decide to buy office real estate or residential or hotel is really secondary, because part of investing in real estate is about the access that you have to information. And I thought that it might be better that we help give you all this information to help you open your minds about what's going on and how we think investments are going to happen in the Philippines, and how the property market is going to benefit from that, and how you will benefit from that. So I'm going to start off by sharing with you this slide about the three growth, or maybe the two growth centers of the Philippines. That's the overseas remittances and the BPO industry. This slide shows you the years from 2001 all the way to 2015. And it's been going at a straight upward climb for 15 years straight. And every time people ask me how long we've been in this boom, I'd say we've been in this boom since 2000, 2001. People didn't appreciate it or realize it because we had so many political problems. In 2000, we kicked out ERA from the office and installed GMA, thinking that that was the right decision. I'm not saying that it was the right or wrong decision. I'm just saying that when we installed her, we wanted to kick her out the next month, and for many years we had rallies on Paseo de Rojas Corner, Ayala, every day for many years, trying to get her out of office. And all these issues kind of buried the fact that there was something growing very, very big in the Philippines, and that's the BPO industry. And the second is the remittances. It started off with about $5 billion back in 2000, and today it's about $25 billion. The BPO industry was only employing less than 1,000 people back in year 2000, and today they employ 1 million people. And in 18 months' time, it will most likely hit 1.3 million people. And what I keep telling many clients now is that you have to prepare for a big boom in tourism and in infrastructure. The last line there on the slide, the bottom side, shows you the tourism arrivals in the Philippines. And I'll talk a bit more about that later. But it's good to know as early as now that the Philippines is one of the least visited countries in Asia Pacific. And then you'll see more numbers about that. But I think in the next 5 years, you're going to see a big boom in tourism. So that instead of just contributing $4 billion $4.8 billion to the economy in the Philippines, it will start contributing 10 billion, start contributing 15 billion, 18 billion, 20 billion. The BPO industry, which started with nothing, is now going to come very close to the contributions of the remittances. So the Philippines, in about 2 to 3 years, will have two very strong legs to stand on. That's the remittances with 25, 26, 27 billion. And the BPO revenues today is only 18 billion, but it's now going to hit 20 to 25 billion dollars. And tourism could do the same thing, and infrastructure is going to do the same thing. So, what's happening to Manila? You know, there's a lot of construction, right? But I'm going to try to quantify how much construction that is. Up until most of my life, there was only one business district in the Philippines. That's Makati, right? And we had a secondary business district called Ortigas. So Makati was built in the 60s, Ortigas in the 70s. But after that, we had a big boom in construction from 1998 all the way to today. We built something like 35 to 36 new business districts since 1995. And the most important of all these business districts today is Bonifacio Global City, where we are today. Had people bought property here as early as 10 years ago, you would have made 7 times the money on land appreciation alone. And Bonifacio has become the most important business district. We think it has been replacing Makati as the financial center. And very soon you're going to see the stock exchange open up in the Philippines. And the big difference there is that this stock exchange will be the United Stock Exchange. We now have 2 trading floors, one in Ortigas, one in Makati, 2 offices, one with the Tisoys and one with the Chinoys, and now they're going to consolidate here in Bonifacio. And it will be a landmark building. Ayala is renting out office space there for completion in 2016, 4th quarter. And as early as now, they're asking prices 1,700 pesos per square meter to rent per month. 1 square meter is about the same space that 2 chairs occupy in this room. So that just shows you, and the highest rents in the country will be done in that building. So 35 business districts built in the last 15 years, and all of them fully developed today. Some of the best examples I can give you is Eastwood City. If you're familiar with Eastwood City, there is no more land left in Eastwood City for development. You look at Rockwell, you look at Makati, you look at Ortigas. It's so congested. There's very few parcels of land left in these districts for development. And the only way you can explain how we consume that much office space, that much hotels, hotel rooms, residential condos, and retail space, mall space, is that we've been in this massive boom for 15 years. And in all likelihood, we're going to have another 5 to 6 years to go. Real estate has been a very important part of that boom. If you look at way back in the 70s, Ayala Alabang, for example, started selling at 170 pesos per square meter, and today it's about 70,000 pesos per square meter. The place where Podium is today, the land right next door to that building, is a 1 hectare property owned by a local person, and he picked up that property in 1984 at 2,000 pesos, and now it's worth 300,000 pesos. Even if you factor inflation, cost of money, etc., I think you'll be way, way ahead investing in real estate in the long term. And now, other than just having Makati or Ortigas as an option to invest in, you now have 35, 38 places to choose from just in Metro Manila. But the boom is not just here in Manila. It's all over the country. So back in the 90s, in the first boom we had in 40 years happened between 92 to 97. And we all talked about how to bring development to the countryside. And I'm happy to say that we have an unprecedented construction boom in the provinces. about 40,500 hectares of land is being converted from idle agricultural land to residential commercial spaces all over the country. How many business districts? About 50. IT parks and business parks. And it's been fantastic. I've traveled all over the Philippines in the last 10, 15 years. I go to some provincial site every week, every 2 weeks, and it's so inspiring to see the change and the development that's going on. And that's, remember, that's just on back of two industries, the BPO industry and the remittances. And let's also remember the fact that there's 100 million Filipinos, 10% or 10 million are abroad. And the only ones consuming what we call, the only ones who are considered, let's say, middle class and above is less than 20% of the population. So there's still about 60 to 80% of the population undeployed. Right? No savings, no credit, no access to credit, or if they do, it's like a 5-6 kind of credit line. And as interest rates continue to collapse, as economic development continue to spread throughout families, you're going to see these people empowered to acquire more real estate. And that's just going to keep pushing prices up because there are more consumers, there's more demand than there is supply. And one of the best examples I can give is Cagayan Valley. So I was there 3 months ago, first time to visit Cagayan Valley, and there's this Cagayan Export Processing Zone, which is what, a massive casino operation by different nationals. And talking to the locals there, they said that prior to this Cagayan Export Processing Zone, people there used to just live off the sea. So if they had good weather, they would have good food. If they had bad weather, they will starve for 2 or 3 days. And since that time, everyone is gainfully employed in Cagayan, the Cagayan zone. And I'm so excited about, let's say, Palawan, because Palawan is going through this massive tourism boom. Every article you read about travel and leisure, about resorts, resorts around the world, Palawan, El Nido is always in the top 10 most visited places or must-see places in the world. It's got a reserve, it's got underground rivers, it's got limestone cliffs. It's one of the best dive sites in the world, and people are getting to know Palawan. And the great thing about it is that they have 2 airports today with a 3rd one coming up, and one of them is going to be redeveloped, expanded, and upgraded in the next 2 years. So Palawan today is extremely inaccessible. The flights are expensive going to El Nido. If you want to go to El Nido, the cheap way, you go to Puerto Princesa from Manila, and you take a 5 to 6 hour van ride to El Nido. And when you get to El Nido, you only have 2 choices. You either rent a 2,000 peso bed per night, or you rent a 25,000 peso villa per night. There's no middle ground. But now, there's more development happening that will address that market, the middle market. And you're going to see a big boom there. Governor Alvarez of San Vicente, Governor of Palawan, and a very big owner of land in San Vicente. San Vicente to me is going to be the next Boracay, with the exception of all the problems that Boracay has today. Boracay is a total mess in my opinion, and hopefully, I think at least from what I've seen, San Vicente is going to be much, much better. In comparison, for example, Boracay is only 4 kilometers of white sand. San Vicente is 14 kilometers of white sand. It's got pristine forest, still there, intact so far. And the governor has made it a point to have massive master planning enforced. And for those of you who know him, he could enforce things if he wants to. So he's very good in making sure that the master plan done by Palafox and Associates will be held, and therefore development in Palawan will be sustainable. It's fantastic. And those are just two examples of what's going on all over the Philippines. Even Mindanao, as bad a press the press gives Mindanao, there's so much development going on there. Davao, for example, is now the second largest BPO location in the country after Cebu. And last year, Davao was the biggest recipient of BPO locators in the Philippines after Metro Manila. So very, very, very exciting, and we think sustainable. This chart will show you where office tenants are going. In all of Metro Manila, where are tenants going? Well, they're going to BGC, the Bonifacio Global City, first, more than any other place. Bonifacio is the largest consumer of office space, largest producer of office space, and yet the vacancies continue to stay low. It's had a 10-year bull run in rents. Investors there are very happy with both the capital appreciation and the rental returns for their assets. And so many more companies are coming here. Mainly BPOs, most of them BPOs. You might have heard from the other speakers about what's going on in Europe. There's a financial crisis in Europe. There's a financial crisis in China. There's a big question mark in Japan after the Olympics. There is the Americas wondering what's going to happen to their market when 2/3 of their market is collapsing. Collapsing in Europe, collapsing in China, and how that's going to impact American companies. Well, even if all these companies go into crisis, I get really, really excited because as the world goes into crisis, they look for solutions to kind of cut their costs. If you're a CEO of a company and you're thinking that your top line, your revenues are going to stay flat for the next 2 to 3 years, how else can you grow your margins if not cutting costs? And one of the surest ways to cut costs is to move operations to the Philippines. And while many companies and countries have resisted doing that, we're finding that even the most socialist of European countries are moving positions to the Philippines for basically survival. They have to keep these companies afloat, and one of the painful things they have to do is to offshore work to the Philippines. And as the crisis continues to brew elsewhere, you're going to see more and more of those things coming to the Philippines, and it's going to employ more people. And because the market is so important, I just thought I'd spend a few minutes sharing with you what this BPO company industry is all about. So 80% of the BPO's jobs and real estate footprint is found in Metro Manila. But more and more, they're going to the provinces. Because of the scale of where Manila is today relative to the BPO sector, we think that in the next 5 years, we're going to see a big push of call centers, BPOs, going to the provinces. And the impact will be very transformative. When I first traveled to Dumaguete 10 years ago, and we helped go bring a BPO call center there, they were so proud, the Dumaguete people were so proud to show us their first McDonald's and their first Jollibee, because they think that that's their level of, they're moving up the scale by having that. And they were showing us their first internet cafe 10 years ago. Now it's like everyone's busy. All the resorts are full, all on back of 2 or 3 BPOs. And how many BPOs are there today? Well, 10 years ago, they were employing less than 300 people in the BPO industry. 10 years ago, and now there's 5,000 or 6,000 people employed in the BPO industry in Dumaguete. And that's, all the taxi drivers, taho vendors, sari-sari stores, 7-Elevens, coffee shops, internet cafes, shopping malls are busy just because of these 2 or 3 companies that are located there. And it's fantastic how, just to think and imagine how all of that's going to keep rolling out. And when you see in the paper sometimes, the press will say, the poor are getting poor, the rich are getting richer. That's completely insane to say. 10 years ago, 15 years ago, the BPO industry employed 1,000 people. being paid 12,000 pesos a month, every month. Okay? And at that time, 15 years ago, those were the highest jobs, highest paying jobs to people who have no experience. Okay, so 1,000 people times 12,000 pesos a month is 12 million pesos a month in salaries. Okay, today there's 1 million people with 20,000 pesos a month. That's 20 billion pesos a month in salaries being flushed into the economy. And the biggest challenge that we keep telling the BPO industry, where I'm on the board of the association, is that we have to have seminars like this to the BPO sector, to the BPO employees, to teach them how to manage their money, because they're just blowing it on the 3 C's. They're blowing it on cigarettes, coffee, and condoms. So the whole challenge now for us is to move them from condoms to condominiums. Anyway, just kidding. You're getting sleepy, so it's after lunch. So just remember that, and we think it's going to keep growing for the next 10 years. And apart from in the provinces, we really like Cebu, Clark, and Bacolod, but there are the next wave cities, and here's the list. By the way, for those of you who want a copy of this presentation, please feel free. The organizers, please feel free to distribute it to anybody who wants it. It's yours to have. Just don't run after me if you think there's something wrong with the slides. So I'm very, very excited about how the BPO industry is going to keep penetrating the provinces. More are going to be employed there in the provinces. Condominiums. I'm always asked whether there's going to be a glut in the condominium sector. I think we're going to be okay because number one, debt levels are still very low. And thankfully, everyone got burned in '97. The scars are still very fresh. So nobody is going out there borrowing crazy money, except for maybe a couple of conglomerates that I probably won't mention here. But apart from that, the debt levels are still very low in the country. And number two, the population base is so big, right? There's 500,000 condominiums today just in Metro Manila. There's another 200,000 under construction in the next 8 years, right? And is there going to be a glut? Well, if there's going to be a glut, it will be very temporary because even with 800,000 apartment units by 2022, not today, but 2022, Manila is still a city of 11 million people with 15 million using it every day. 2 to 4 million people travel from outside to Bulacan, Antipolo, Cavite, Laguna to go and work in Manila. And so I think, and then the other thing is that 50 to 60% of this condominium supply in totality is priced between 1.5 to 3 million pesos. These are the 20 to 30 square meter apartments. And then the high end is a very small component of that. It's probably only 5 or 6%. And as ridiculous as some of these apartments sound to you, the reality is that the supply of that segment is very small. So I'm not too worried about that. The condominium supply is addressing the needs of the people. It's addressing the real middle class. The lower middle class that's wanting 1.5 to 3 million peso apartments. The middle class wanting 3 to 6 million peso apartments. And then the upper middle wanting 6 to 10 million peso apartments. So the other trend that we're seeing is that a rental market is emerging in Metro Manila. There is this mentality that Filipinos have that renting is wasting money. It's not. In fact, if you don't own real estate today because you can't afford it, well, just keep renting. Because by renting, and assuming you're giving your landlords very modest returns, right? 5 or 6%. If you're giving your landlords 5 to 6%, that's fine. because the rest of your nest egg you can use to deploy somewhere else and make it grow faster. Like, if you're able to put your money in the stock market where it's earning 23%, you can give the 5% to your landlord and invest your money in the stock market, which is, personally is what I've done all these years. My wife and I rented for 10 years of my working career, the first 10 years of my career, before we even owned any real estate, and I deployed all that money in the stock market. So if you ask me where I made most of my money, investment money returns, it's in the stock market. And I was able to do that because I didn't tie myself down to a hard asset too early. And when I'm able to cash out in the stock market, that's when I move it to the real estate market. And I'll share that with you a bit more later. So there's a lot of stock coming everywhere, and some of the prices are crazy. For example, Bonifacio has the most expensive apartments today. You might have heard of the Shang at the Fort, Shangla Hotel at the Fort. It's a very tall building, 65, 70 stories. The first third is a hotel, the second third is a service apartment, and the top 20 floors is a residential apartments called Horizon Homes, right? The smallest unit is 250 square meters, and that's a 2-bedroom, 250 square meter unit. The largest is a 4-bedroom, that's 420 square meters in size. How much are these units selling for? Well, roughly about 300,000 pesos a square meter plus VAT. So your 250 square meter apartment, 250 square meter 2-bedroom apartment is going to cost you 88 to 90 million pesos plus VAT. And your 4-bedroom is going to cost you 160 million pesos. And as fantastic as that sounds, the reality is that with 160 million pesos, you can buy a nice, first-class, world-class apartment in probably the best building in the Philippines. And it still is the cheapest high-end apartment you will find in Asia Pacific. Okay? And what will 160 million pesos get you today? Well, it will get you a 500 square meter house, a 1,000 square meter house and lot in Bel Air. Okay? I might make it sound too small, pero it's all about relativity. So, and I'm just using the very high-end extreme, which is the high-end luxury apartments. And yet people are buying. And some foreigners are buying because they still find the Philippines so cheap. And those are just land prices that have, and how they've appreciated over the last 5 years. So why am I optimistic? First of all, I'm not bullish. I'm just optimistic. I'm optimistic because, number one, we've got such a huge population, right? A lot of companies and governments have criticized the Philippines about, this massive, unbridled population growth 10, 15, 20 years ago. Well, funnily enough, those same people are the ones saying, wow, we love to invest in the Philippines because it's got such a big population. Anyway, so we still are some of the fastest growing populations in the world. The BPO workers are continuing to come here, and the remittances will keep flowing into the country, right? Now just think, there are 10 million Filipinos. How many of these 10 million Filipinos do you think own real estate? My guess is less than 2 million. There's still 80% of that market untapped because, number one, they think that they'll never want to come back here, or that they want to stay away from the relatives here. In fact, some of the Filipinos who are here secretly own apartments in Bonifacio or Makati because they want to be as far away from the relatives from Iloilo, or from Bacolod or from Ilocos. They go there, they visit, they have a nice sentimental journey, and after that the weather gets them, the traffic gets them, the relatives get them. They say, ayoko na dito, punta na ako sa Manila, doon ako sa Bonifacio, which reminds them of Singapore, San Francisco, even though it's only a few blocks of San Francisco or Singapore. So I'm being I'm going to have to rush these slides now. So, okay. Tourism. This is a number of visitors per country, Asia Pacific. Okay. China has 55 million visitors a year. Okay. Thailand, despite the problems on flooding, and by flooding, it's not like the flooding in Manila. Bangkok was swept away by water for months. It's not like here now, okay, we might have a bad Ondoy day, 2 days of flooding and that's it, right? Yes, there is devastation, there is suffering, but it's not like what Bangkok went through a few years ago. Bangkok also went through a civil crisis, so they now are under a military junta. And despite all that, 22 million people visited Thailand through those years, every year. And here in the Philippines, there's less than 4.8 million, right? 1.13 billion traveled over the Philippines. 1.1 billion traveled over the world, right? And only 4.8 million of that went to the Philippines. That's a market share of 43% of 1%, right? Which is nothing. Nothing. So I get so excited about tourism because, when you're at the very bottom, you just look up and everything is just so beautiful when you look up. And I think that's what's going to happen to tourism. And bear in mind, the slides I showed you earlier, this tourism number started at 1 million people visiting the Philippines, and now is 4.8 million, despite what? Despite SARS, despite all the coups, despite all the kidnappings, all the bombings, all the typhoons, all the flooding, landslides, drownings, boats blowing up, buses blowing up. I mean, you name it, right? Despite all these kidnapped victims writing books that are becoming bestsellers that tell people that the Philippines is a dangerous place, despite the fact that all these media people, something blows up in one corner and then, avoid the Philippines. And yet, you have all these schools being ransacked in the US and nobody says, don't travel to that area because, you've got crazy shooters there every year. So I'm very excited about tourism. And yes, while the country is still very difficult to access, it's exciting to see the number of airports that are being built all around the country. And these are not the drawing versions. These are actual projects under construction today. Hopefully they finish on time and not get stuck in 10 years of litigation. But my expectations have been very modest. I always say that in the Philippines, we're very good in drawing, right? We draw the train, we draw the subway, we draw the airport, the seaport, the buildings, and we never get to do them, right? So these are live projects happening all over the Philippines, and it's very exciting to see. So that people who are from Singapore, Hong Kong, Malaysia, who want to visit the Philippines, don't need to land in Manila anymore and then hop in again to somewhere else and waste 2 days just getting to El Nido or getting to Boracay. Because that's what it takes. My ex-boss rather, I should say, flew in from Singapore to Boracay. It took him a whole day. And he's saying, if I'm an expat with 5 days leave, why am I going to blow 2 days just going in and out of your country into Boracay? But that's all slowly being solved. I'm going to skip through this now. It's complementing what I said earlier. And it's so amazing to see what people are talking about the Philippines. Please have confidence in the Philippines. Because, up until the last couple of years, I thought that the foreigners were more confident about the future of the Philippines than the Filipinos themselves. Right? And I say there's something wrong there. Maybe they know something that we don't. Or maybe we know something they don't. I don't know. But it's the fact that you can criticize the Pinoy administration as much as you want, but the fact is that it's only in this government that we've had these investment upgrades. And as you might not appreciate what an investment upgrade means, what it means to you and me is that interest rates have now come down to a fifth of what they were 15 years ago. I mean, I remember my mom taking a loan for our first house, and interest rates were 18% back then, and today you can get the same loan for 5%. I mean, fantastic. And again, 56 projects, PPP projects in the pipeline. So public-private partnerships, and then they nicknamed this PowerPoint presentations, and now post-Pinoy projects. They're all drawings, except for a handful. But I'm excited because we think that this next president is just going to unleash hell and get all these projects going, regardless of who this new president is going to be. Whether it's Miriam Defensor or Binay or Vice Ganda, wherever. So I just thought of sharing some trends with you, okay? So the usual trends that people talk about is like the weather. We all know that the weather is going to go through a lot of havoc. Even up to today, you know, we're expecting this massive thing raging havoc in our country. And it's going to get worse everywhere globally at the same time. 1 minute. So, talk about earthquakes. So we're all done with that. I'm going to share with you some crazy stuff that I think is going to have a relevant impact to real estate and to people in particular. This is number 1 slide, artificial intelligence. Have people talked to you about that? Okay, the evolution of man, you know, from monkey to, I don't know. But so many companies are investing money in artificial intelligence, which is like robotics, right? So much so that in 35 years, as much as these computers will be as smart as people. Now, computers have been beating world-class chess champions for many years. But chess is just, you know, one aspect of your brain, right? There's also creativity, there's also all these other things. There's love, there's emotion, and very soon, in 35 years, our lifetimes, computers will be able to do something like that. Automation could erase as much as 22 million jobs in the US in about 10 years. Okay? I'm just going to keep pressing the slides. Okay. $4 billion invested by private equity funds into research and development to improve AI. Okay? What does this all mean? Today, I can share with you that one of the largest BPOs in the world has a chatbot. A chatbot is like, you know, you have a problem, and if you have a technical problem with your computer, you type this, you type into this email, and into this email chat, and then this other person will respond and try to solve your problem. Well, that other person is actually a computer that can sense how you're feeling based on the words you use and the phrases you use, your temper, and what you call a context. They have contextual processes and notions today. And when that computer can know whether it's helping you or not, if it's solving your problem or not. If it realizes that it's not solving your problem, it will pass you on to a real person. And when you start getting past a real person, that computer will start sitting in the conversation and learning from that conversation. So that in the next round, when somebody else calls with the same problem, it will do better in solving that problem. Why are companies investing so much money in this? That's just one of many, many examples that's happening today, right? With the end in mind to curb employee base, right? So by AI, in about 5 to 8 years from today, they think that they can take as much as 10 to 15% of your workforce redundated to go into and be taken on by computers. Why? Because robots will not strike so far. They will not complain about lunch break or stuff like that, right? They're not like people, because people are so people. And there's some benefit, and if you look at all the things that Steve Hawkins and Bill Gates have talked about, they're very concerned about how we are just pushing the envelope in terms of increasing intellectual capacity of AI. Not to scare you or anything, but it's a real concern. And it will happen in the next 10 years to 15 years. Biotechnology, it's amazing what biotech is doing, right? To people, it is actually very, very dramatic. Sorry, before I go into this, one other interesting thing you might like to know is that in Japan, in June of this year, they launched this little robot, okay, 3 feet high. And the whole aim of the people who made it was to replace the use of a pet in Japan. Because pets, they poo everywhere and then you have to bring them to the vet. Here, you just have a 3-foot robot. And the cost of that robot is equivalent to how much a Japanese person will spend owning a dog. Okay? It's $3,000, $4,000. It can speak 27 languages. It will feel what you feel what you're feeling. If you're lonely, just with the tone of your voice, just by the words you use, by your hand gestures, it will know what you're feeling. And then it will try to just talk to you and keep you company when you're 100 years old and alone in your apartment. And they sold all those units in 15 minutes, in the first 15 minutes. And it's more and more of that's happening. Now, we go to biotechnology. What's biotechnology doing? It's going to extend life expectancy. 300 years ago, the average man will live up to 25 because disease and war will kill you off. Then 100 years ago, 40 years. Today, it's 8 years if you're in Japan or Upper Europe. But very soon, the time will come when people will live up to 150 and yet still have a body of a 40-year-old. Because biotech is going to do all that. I'm being rushed to finish this, so I'm going to spare you all my cuento and just rush through these slides now. Here's another thing. So you've got robotics, you've got biotech, and you've got global population, which is today 7 billion, of which more than 40% is in Asia, in between 2 countries, China and India, Chindia, right? So, but this global population in the next 80 years is going to go from 7 billion to 11 billion, right? Plus you compound the fact that you've got life expectancy growing from 80 to 150 or 200 in the next 20 to 30 years. I mean, just look at how many people are living with cancer today. 15 years ago, you have cancer, stage 1, stage 4, doesn't matter. You're dead in like whenever. But today, so many people are living with cancer, have overcome cancer. HIV, AIDS, and what used to be threatening is now not so threatening anymore. And our thesis is that, apart from global aging, you've got all these issues about many of these economies not being able to afford to support their aged people. They're not like Filipinos, and Filipinos will take care of each other. In the West, it's like, it's hard because of the lifestyle. And so, we think that the Philippines is in a very good position to pick up the global aging markets because we're so connected with people, we're so empathic, labor is cheap, and most importantly, the quality of medical care here is so high relative to the cost. It's so cheap, which is why everyone comes to Belo in the Philippines, right? Anyway, but we have a long way to go because the Philippines is just not so exciting from a retirement thing yet. Why? Because the taxi, as soon as you come in, the taxi driver will hold you up, the bar girl will hold you up, your girlfriend will hold you up, everyone's going to hold you up. As soon as we stop holding our foreign visitors up, then they will start feeling more comfortable about coming here, living here, and investing here. So I'm going to end with two slides. So number one, people have a very romantic notion of real estate, right? It's my dream house. It's my biggest investment. Most of the time, for most people, real estate is the single biggest capital outlay, cash outlay they will ever have. It's the single biggest source of debt, and it's the last piece in the jewelry box they will sell when it's time for them to go. But you have to remember that it is the least liquid of all asset classes. What does that mean? If you need to sell your Ayala stock, you can just make one phone call or one click with COL Financial, and you're done. If you want to buy, one click, one call, you're done. Here, you're going to call hundreds of people. You're going to have to wait, sit and wait for the right buyer for the right property, and it could take you months, sometimes years, to be able to sell your asset. Okay? I'm not saying quick deals don't happen, but the quick deals are less than 1% of the transaction volume. Most of these transactions are done over a long period of time. And owning your asset is not the same as possessing your asset. You could, it's funny how all these foreigners buy islands in the Philippines because they're so romanticized by, tropical paradise, They don't know there are mosquitoes there, diba? So, but they also don't know that Abu Sayyaf is there or those insurgents are there, and then, binili ni Mr. Smith to, and then they now occupy the island, and then Mr. Smith is saying, how the hell am I going to get these people out of there? And then taxes, it's still very, very high. It's one of the highest taxed properties in Asia Pacific. It's subject to corruption. For those of you who have tried to transfer your titles yourselves, you know what goes on there. And then you've got all these, all of a sudden the registry of deeds in this district or that district burns the whole place. And it's like, the next day it's like, sorry, your title's burned, So you have to be aware of the issues. And interest rates and debt are significant influencers of how your asset performs. So, and I would caution you for picking up too much debt. In fact, any debt. As conservative as you can about debt. You have to be as conservative as you can about debt. And then there's estate. How do you transfer your asset from your person to the next? And it's not transparent. If you want to buy a stock, you can, COL will give you tons of research, and 99% of the time they'll be correct. Here, you're going to talk to broker A, broker B, broker C, and it's like, who the hell is telling me the right thing here? But why are people so obsessed about real estate? Because, number one, it's real estate. Meaning, you're not holding a certificate of shares of some company that you don't know that's now been resold and resold and resold, just like what happened in the US. People thought they owned something, and yet those very savvy, maybe investment bankers, I don't know, sorry to the investment bankers here, but they just resold all those certificates so that people didn't know anymore what they owned and what they didn't own. And that's why we had this property boom in 2008 and 2009 in the Philippines. It started there when all these rich, wealthy, high net worth individuals in the Philippines said, I've been burned by my investment banker in the US. I'm going to terminate all the money I have around the world. I'm going to put it here in real estate. So I didn't want to buy this Forbes Park house, but now I'm going to do it back. And now we saw from 2008 a big jump in property prices in these villages, because they realized that instead of owning the certificate of I don't know what, they now own something that is real, that will not be taken away from me for as long as I have a security guard there in the house. So it's real, Title, asset, that's it, simple. It's very, very physical. But also, it's probably the best thing that can give you sustainable, passive income, long-term, plus asset appreciation when you sell it. Hopefully, you're selling it at the right time. hopefully you're selling it at a time when the values are high and you acquired it low. And for as long as there are people, even with robots, there will always be real estate needs because people need some place to work, some place to live. Having said that, I don't know if you've learned about Oculus. You know Oculus? This helmet that you wear and then you're all of a sudden inside a game.
Virtual reality.
It's a virtual game. So it's like, instead of, I can be in my sofa in my house and I wear this Oculus and all of a sudden I'm in a room like this, right? And it's all digital. It's all computers. But what they're trying to bring social media to today is not anymore texting with your phone here. It's about wearing Oculus, and that in that Oculus you're in a cafe, and then your friend who you used to text and do Facebook with in a computer is going to be right in front of you, cosmetically improved. Kasi there, they can trim their weight, they can, they make their lips more puffy, their eyelashes more, ganyan. But that's what social media is going into. The moment they make Oculus so cheap, it's not just going to be about gaming. It's going to be about social media. It's going to be about meetings. It's going to be about taking virtual meetings to a different level. So, but yes, for as long as there are people, there will be users of real estate. It's just the way we use real estate will be different. And it's some of the best vehicles to pass on to the next generation. And then, but you have to be aware of global trends. So these are some of my tips. You have to watch the stock market very closely because the stock market is usually 6 to 24 months ahead of what happens in the property market. Most of the time, not all the time. Property always goes up, is a myth. Okay? In '97, Ortigas CBD property was trading at 200,000 pesos per square. In 2003, it was trading at 70,000 pesos per square. Today, it's at 300. Pacific Plaza Towers, the first unit there, 300 square meters, 30 million pesos. It fell to as low as 19 million. Today, it's 60 million. Okay? There's a saying in real estate that time will correct your mistake for as long as you have the holding power to do it. Right? And hopefully, you buy low and sell high. But one of the things that people always take for granted is life insurance. They say, I don't want to talk to my freaking life insurance agent anymore, right? But the reality is that as they accumulate more assets, you have to match that with some kind of insurance. Because there's one thing that you just don't know is going to happen to you, right? That's death and the tax woman. It's not anymore the tax man because we now have a tax woman who will most likely cross over to the next administration. So you will not get rid of her just because you got rid of the president, right? So so you either don't die or you don't report your assets. And that's how you avoid death and taxes, right? So you have to match your assets with insurance coverage, please. And it's very emotional, but you really have to be unemotional about your asset. Many of my clients say, my grandmother worked all her life, and now they become trapped by that legacy. The grandmother is long gone, the mother doesn't really care, but the grandchildren are saying, how can we sell this asset when our grandmother lived so hard to do it? Well, I'm sure your grandmother didn't mean to chain you all down and haunt you by locking you up in this asset. I'm sure if you asked her, if you had a seance and what do you call them, witch doctor or whatever, and then you ask your grandmother, she'll say, you know what, sell the asset. I don't care. Be free. Your house is not an asset. Okay. It might be a very big financial liability. So you just have to. It only becomes an asset, according to Robert Kiyosaki. It only becomes an asset if it starts earning income for you. And income is not paper income, but actual cash inflow. And then, this is very messy, but the moment you start accumulating real estate, you have to put it in a structure where it's sustainable, that it will survive you, right? Because very often, I deal with clients who mom and dad passed away, grandfather, grandmother passed away, and they still have problems with the asset. They don't have the money to pay for the estate, they don't have the money to pay for the penalties, and they're all fighting over each other to the asset. Why? Because the asset is in their personal name, and the moment it gets transferred to the next person, it gets chopped up into so many people. And then, unlike in real estate, unlike in corporations, in real estate, your vote is unanimous. You and I, if there's 7 of us inheritors, legally, we all have to agree together whether my share is 1% or 20%. In corporations, it's not like that. So you would do yourselves a big favor by moving these assets into corporations, so that if something happened to you, you get this asset passed on to your heirs. They will vote over it, and tapos. Right? 51% done. Decision is done. It's not like if it's under your personal name and in their personal name, it gets very, very, very messy. The problem with keeping it in corporations is that you have to do a lot of maintenance. You have to pay your taxes. It's easier to be monitored, and there's a whole lot of complications. You have to have an auditor. You have to have a lawyer. Complicated. But that's how you manage the risk of dying and passing on the assets successfully to your next generation. And with that, I'd like to thank you for your attention and for your time, and thank you for letting me do this.
Thank you so much, Mr. Leechiu, for that.